You're watching Yahoo Finance. I'm Julie Hyman. Well, Tesla and Netflix provided the record scratch for the earnings season thus far yesterday. And this really speaks to how high expectations are, particularly for some of these big tech companies. And guess what? They didn't meet those expectations. With me, Myles, Udland, Seana Smith, Josh Schafer, to talk about the expectations game, to talk about Tesla, to talk about Netflix. Talk about everything, I guess. I don't know, Myles, where should we start?
Well, everything through the prism of just two things.
Yeah,
the best way always to tell a story. I think what's been interesting to see, obviously the reaction we saw yesterday in the two stocks, both Netflix down 8%, Tesla down 9%. Clearly there was some thought that there might be this whole, the bar is so high that you can only disappoint. Of course, look back at the stocks year to date, doesn't really make a huge dent in that run so far, but it also comes, Josh, during a week where we've seen a broader rotation within the market. Cyclicals are really doing the leading this week. We've seen the Dow outperforming, and I think we can go through the details on Netflix and Tesla and how sensitive investors were to guidance, but ultimately it does feel at a market level like we're getting some sort of answer to the question of, has the rally been too narrow? Well, right. I guess not. I guess now we're broadening it out. This is the moment where it broadens out.
Right, and it's starting to broaden out more, and it'll be interesting to see how it happens when those companies start to report as well, too, right? When we see more companies report, you have about 40%, I think, of the S&P 500 reporting next week, so we're going to get a little bit of a clearer look at it. But I think one thing that was interesting when you think about Tesla and Netflix, too, and we've talked a lot about the AI-started run, right? The AI started this rally, and it's been an AI-driven rally. There's still a debate if Tesla's an AI company, right? I think that's a little bit out there. And Netflix really isn't an AI company. You're really getting those reports next week. So we're actually going to see how the market's reacting to the tech rally and that AI rally, I would argue, more next week when companies start talking about it and their products actually have to do with AI. So I don't think that's quite the read here. I think there's been a little bit of, tech people are trading down or trading off, selling some profits, and I think it'll be interesting to see what happens next week when we actually get tech earnings.
Yeah, I agree with that. And I also just think that these two results, at least so far, was kind of a reality check, Julie, going back to what you were saying, just in terms of the misses and the fact that they didn't really quite match investor sentiment, right? The expectation was very high for these two reports going into these results, and investors found something wrong with both. When it comes to Netflix, it was the revenue, it was the guidance. When it comes to Tesla, obviously, it was the pressure that we have been seeing now for 2 quarters on margins. And that's something that investors are worried about. This rotation, I think, helps investor sentiment in terms of this broadening breadth that we are starting to see in the market. Whether or not the earnings season is going to be enough here, the results that we've gotten so far, to keep this momentum going to the upside, I think that's still too early to tell, given the fact that we have so many very important results still ahead.
Yeah, and these two companies, they don't, they're not as much AI centered, right, as the companies that we're yet to hear from. I thought it was interesting. We talked with longtime tech investor Paul Meeks in the last hour, and he said, he wants to see the goodies, I think as he put it, when it comes to AI. Like, when is this stuff going to actually start making money for these companies? Yeah. Not just these things are in development, this is what we're working on. When is it going to start to make money? He says that's not going to happen yet, right? It's not going to happen, ex-NVIDIA, I guess, for a little while. But his concern is that because investors are so obsessed with it, they're still going to punish companies for not talking a lot about it. So that'll be an interesting thread to pick up on what you said about AI. That'll be an interesting thread next week.
I guess, then it kind of gets to that question of the company fundamentals versus portfolio construction, because everyone has already chased all these names higher, and they're like, well, it'll be fine. It's been fine for me. I'm making back some of my losses from 2022 by buying every FANG with both hands, essentially. And so whether it bears out for the company, I guess NVIDIA has some fundamental basis there, right? But if I'm a growth manager and I bought a bunch of Meta at the beginning of the year, honestly, I don't really care. Stock's up 150%. I've gotten what I need out of it. Now, of course, it's very possible that I still own a bunch from the record high back in 2021, and so I might, still be having some issues there. But I think we get into this phase of the market rally, the reset phase, and you saw it, that kind of furious peak into the end of the first half of the year, because you're setting up, okay, what's my client letter going to say? Well, it was good when you sent it out in July, and now it becomes this question of what do I do for the third quarter? How do I get this thing in the house for the full year to say it was actually a good year? And the answer might be, well, I just sell all the names that went up a bunch, and I actually don't really care if they make money on it this year. Maybe
not a bad trade, right?
Yeah.
An interesting part too, Sean, that you were talking about that I wanted to highlight when we talk about those companies missing on sales. I thought it was interesting to see how the stocks have reacted versus if you miss on sales, you miss on EPS. Julian Emanuel over at Evercore does a great job of tracking this and where companies get hit the most the day after. And companies that have missed on sales but beat on EPS have actually had the worst stock reaction of earnings thus far. They're down about 4%. You can see actually not doing better than companies that double miss, which are doing worse, than companies that double miss, which is quite interesting. And then when you can look at the 5-year average, companies are not normally hit that hard when they miss on revenue, but beat on EPS. So people focusing a little bit more on those. You could also argue that they're just the bigger companies that we've seen so far.
I mean, my kind of takeaway from that graphic is so it's a bull market. It's an economic expansion because essentially if you can't grow the top line, which is just the basic, can you sell more goods and services, then you're going to get punished because you can't do the whole the macroeconomy is bad thing anymore.
Yeah, and I also think that goes along with the line of thinking that many strategists, many economists were saying in this angle here, going into this earnings season in terms of those expectations and the ability for some of these companies to meet expectations. Also, what I'm going to be looking for is we certainly have seen this broadening out of the AI hype over the last couple of quarters, and we had Coca-Cola, almost every single industry here mentioning.
Pepsi, I can't believe it.
It was almost the first one that really stuck out when someone was like, wait a second, why are they talking about AI? But how much hype we will see in regards to those names who haven't necessarily, obviously, rightfully so, participated in this AI rally yet, if that's going to be enough to get investors excited about the fact that a lot of these companies are in a position to maybe have a tough couple of quarters given the fact that consumers are pulling back on spending. They've needed to raise their prices. Pepsi, obviously, the results were very strong, but Coca-Cola will be hearing from them next week, and whether or not the volume sale there, how big of a hit that is going to take, and whether some of those comments about AI will be able to offset some of that weakness. I don't know.
It probably won't help if you're thinking about the overall narrative that we were just talking about, right, in terms of sales, because AI for them doesn't help sales. But the argument that when they try and make a real constructive argument about it, they try and say it's going to help profitability, right? Because they're going to be able to operate better. Yeah. So if you're looking at it from that sense, then maybe not, because Netflix talked a lot about being good, profitable, right? They had a lot of positive, profitable stats, and people just wanted to look at it as a growth company and be like, where are you giving me more money?
Well, I think what's interesting, looking at that graphic that we just showed from Julian Emanuel, is to the point of, well, this is an economic expansion. This is a bull market. So maybe in the your first quarter earnings, we're sitting here in April of 2023. And it's like, is the economy good? I don't really know. So Coke, who is a volume business, who needs the economy essentially to be expanding, they're a GDP plus type grower. Yeah. They have to go, they're sitting in the strategy room, let's say AI a bunch, and it'll be fine. Just AI, generative AI, do the whole Sundar Pichai bit. I'm not really sure that for a company, a staple, consumer staple basically, you need to do that or should do that anymore. I don't
think you should do that, but we have seen companies do that.
Well, but I think you should have a quarter ago, because it's like, sure, it's free money, just go for it, whatever. And no one will ask too many hard questions. Now it's like, hey, the economy's doing fine. Like, can your business, do we have a good business here? Let's get back to doing a good business.
Well, I guess we're all done. We're not going to talk. We were going to talk about Elon Musk on the call.
I did a small amount of research for this.
12 minutes. Fast.
I don't think it was.
We came in late. I think we came in late.
Whatever the case.
It is 11:12 though.
We'll see you next time. Have a great weekend, everybody.